here we go. We got the Russell 2000 here and now. Here, let me pull that. Let's make sure you got that Russell 2000. That IWM iShares Russell 2000. What do we have in comparison down here is the IWB iShares Russell 1000. Both are IWB iShares, okay? They both have indexes, but what we take a look at is how these ETFs play out. And when we are teaching bottoms, do we only look at the NASDAQ comp, only the S&P? No, we look at lots of things on how bottoms are put in. When they were over, we told everyone over here on 5.2, and it's on stockmarketfunding.com, just like this reversal here was a little bit different. This reversal over here was on 5.3. It was a day later. So what? 5.2 actually, but it started their moves down on 5.3. We were extremely overbought in all of these, and we had covered these back in those months. We covered all the sector indices. Now we're looking at the iShares, because all of these, you can take a look at how these bottoms were put in. You can take a look here, the daily doji reversal to that support level, how we had ran up and tested these bottoms. I did not want to go lower. And then we started the 5-day breakout in the Russell 1000 and the Russell 2000, except the Russell 2000 up here, MMTs. What's good about it is known as diversification between the two. The thing about it is, once again, there are bear ETFs that go with this and bull ETFs that go with this. These are the IWB shares. There are ETFs, though, outside of iShares, different instruments that are related to the exact move of the Russell 2000 and 1000. It's very important that you learn this as we're going into a July 11, 2011 earnings season. You can see that we have rallied up from that long term. We were deeply oversold. Short term, deeply oversold across the board. And it's all about how the bottoms and everything was leveraging themselves up, and how to be long the bull, how to understand where to be in tech, semis, and all the stuff and all the training that we're doing is understanding the diversification of breakouts, because they're all tradable for a profit here. We'll be doing hundreds of more of these, but right now it's very important for you to learn where these iShares are and how they're tradable. We'll have our person index these correctly. When these run into resistance levels and they start to reverse, because this was we had very long downtrends. Now we've had 5 days up, but look at how many down days on a daily level. Yes, we had pops and failures, but that doesn't matter. That's how these trades work. You don't go straight down. You pop up, you reverse, you make lower lows. Then you get to a bottom where you consolidate. And it's all about the consolidation across the board that says markets are short-term oversold, and how markets are going to make their highs, and how markets are going to break out, and how you correlate and tie all of those directional movements into one.